Hey, what's up guys? Omar here, broker and CEO of Alden Mortgage and OMA Realty. So we're gonna do a mortgage rate update. Mortgage rates did go a little bit on the higher side, and then China, we're gonna go ahead and talk about what's going on with these poor bastards. Well, not really poor because they are, yeah, it's really a bunch of shit, and how this could actually affect us coming here in the United States. Because let's face it, back in 2008, when the mortgage crisis here stemmed here in the United States. Did I just say here twice? Whatever. From the United States and the United Kingdom, and I am so sorry about the beeping. It is 7:30 o'clock in the morning, and this is what happens every single morning when you live in a new development. Okay, when you live in a new development, you wake up at the ass crack of dawn to this. I don't know if you could hear it, but it's constant beeping over and over and over again. You just want to shoot yourself in the goddamn head. Think twice about moving to a new development. Wait till the whole goddamn thing is, well, there's a catch-22 between buying a new development and not buying a new development. If you get in the early stages of buying a new development, it comes in way cheaper. You get it way less than the back end, like phase 4 or 5, or how many phases that they have. Like, let's say they're breaking it up to like 3 phases, where they're building this amount of homes in this amount of time, and then whatever. This is what you'll end up with. If you get in the first phase, well, you're going to be paying a less premium. When you get into the 3rd, 4th, 5th phase, however many phases they have, you're going to be paying a lot. Just an FYI, every goddamn morning you wake up, you hear these sons of bitches, and it's like, it's really annoying. So apologies in advance. But the real estate market back in 2008, the United Kingdom and the United States, was a combination of where the mortgage-backed securities that were selling, the really crappy ones, that affected the whole entire world. Going on from there, it affected the Chinese stock exchange. It affected, the South American stock exchange. It just affected everybody. But there's something going on in China too that we could go ahead and kind of caddy into. Because it's a big population. It's the second biggest economy in the world right now. So what they do could affect the whole entire world, especially when it comes to real estate. We're going to go ahead and talk about that. But let's get into the mortgage rate update. The mortgage rate update as of 8/12/2022. We're going to be pricing out 10 different mortgaging products. We have a 30-year fixed, and interest rates did increase just by a tad. They're all kind of hovering between the 4.5. On the 15, they were around the 3s. But 30-year fix will be sitting at 4.59%. 15-year fix will be sitting at 3.62%. 30-year high balance will be sitting at 4.86%. Oh my God, this fucking beeping, man. It's like constant. You try to keep an upbeat little attitude for these videos, but this goddamn... goddamn beeping all day from the crack of dawn. And I'm talking about, like, when I wake up at 5:30, from 5:30, and it just keeps going and going. I swear to God, I don't know how my kids aren't awake to this. Whatever, they just got immune. DSCR loan, debt service covered ratio loan, is going to be sitting at 8.20. Is the only thing that actually dropped. DSCR loan is a debt service covered ratio. This is mainly a loan product for investors. What in the actual fuck are they doing? Are they demolishing houses now? DSCR loan, debt service covered ratio, where it's a debt versus a servicing. The debt is going to be your principal, interest, tax, insurance. The servicing is going to be the rental account. So we don't need your W-2s. We don't need any of that other stuff. We're just going to go ahead and use the amount that you have coming in as rental income versus the debt going out as a mortgage. And then we calculate it based off of that. And it has to go ahead and get into a ratio. The ratio, to give you an idea, a 1-to-1 ratio would be if your debt, if your principal mortgage is going to be at principal, interest, tax, insurance will be at $1,000, and then the amount of rental income you have coming in is $1,000. Now you have a 1-to-1 ratio. We typically like to see to get the best rate, to get approved, between 1.25 and like no less than 1.2. That's probably the least. Anything above that is always going to be great. But that'll be sitting at 8.20. Bank statement loan, this is another one of those non-agency, non-qualified mortgage products where we don't look at your W-2s, we don't look at your tax statements, we really don't give a damn where your money is coming from. We just need to know if the money is coming in versus we calculate the money that's coming in versus the money that's coming out. FHA 30-year fix will be sitting at 3.89%. 7.6 adjustable rate mortgage. This is going to be an adjustment. 7 means the total of years that stays interest only. The 6 is going to go ahead and the amount of months, not years, the amount of months that it's going to go ahead and adjust. But if you see a 1 after that, that will be a year. So if it's a 7.1, it's going to go ahead and stay interest only fixed for 7 years. Then it'll adjust every single year according to the rate and the cap on your product. That'll be sitting at 4.8%. USDA 30-year fix will be sitting at 3.93%. VA 30-year fix will be sitting at 3.95%. And hard money fix and flip actually increased the most at 9.5%. Now that's going to be a mortgage product for people who want to get into the rehab business. It's typically short-term loans. Oh, hey guys, let me go ahead and get in between this whole mortgage rate update. I know I didn't do this plug-in, but if you want up to 50% commission rebate on selling your current home, 0% listing on selling your home. I'm so sorry, did I messed that up already? Okay, let's try this again. Up to 50% commission rebate on buying your next home, 0% listing on selling your current home or any of the mortgaging products we talked about. Link in the description below. Let me beat your big bank. Let me at least attempt it. Put me on your lender's list, because that's what we do. This freaking goddamn construction is driving me crazy. It's insane. I'm gonna shoot myself in the freaking head. It's like constant. Well, let's get back to the video. But let's get on with the ripple effect so back in 2008, of course, the things that we did here when we sold those shitty loans, and we didn't do that on purpose because I've been a mortgage broker now 20 years. They just let us do it. If somebody's willing to buy something that you're selling, you're gonna go ahead and sell it. So if like you said, hey, I'm gonna go ahead and sell you, like that phrase that could sell a. Holy shit, I'm gonna kill myself with this beeping. It's like they're driving into my house. I am so sorry. We're just gonna get through this. So if somebody said I could sell a ketchup-filled popsicle to a woman in white gloves, that's a saying, right? You're gonna sell anything that anybody's willing to buy. So if somebody came up to me and said, hey Omar, I have no credit, I have nothing, I just want to get into a house, I'm like, cool, you got a little bit of a down payment? You're like, yeah, I got something. And then I'm like, all right, cool. Hey bank, would you like to buy this? Yeah, of course we would love to buy that. That's great. We're so excited to take your money. Not only that, we're gonna go ahead, because they get paid off a yield spread premium. They go ahead and give us tons and tons, especially when we sold some of these subprime mortgages. The subprime mortgages, especially the neg-am ones, they used to give us, like, on some cases, like maybe like between $30,000 and $40,000 per mortgage that we wrote. Now that it has been capped, there are qualified mortgage scenarios that you have to go ahead and put each and every mortgage through. We can't go over 3% on any single transaction. That is with all fees included. This is your title, your escrow, your origination. So even if you want to buy down, certain wholesalers do have limitations on what you could do. But that was the ripple effect that it had in 2008. Now in China, this is something that's going on too, except these guys don't give a shit. They're gangsters as a motherfucker. In China, they have this thing that's called the COVID zero, Beijing zero COVID strategy, right? So if anybody has any signs of COVID, you're on lockdown. That's just what it is. They go and they do the scanny things. And I don't know if you've been to China. China's actually a pretty beautiful place. I've been to China. I like China. I've been to Beijing. I've been to Hong Kong. China is actually a very, very beautiful place. It's a cool place. I liked it. Whenever you go anywhere, I don't give a damn where you go. There's good things and there's bad things. There's good people and there's assholes. Well, for the most part, because they are a communist country that just transitioned to what's called a socialist country, that's why you hear so much about China now. They say, you know what? This sucks. This zero COVID strategy that you have going on sucks. We can't go to work. My income is affected. I have, I got restricted on savings and investments. That's disrupting China's, whole economic infrastructure, and it's really, really crucial to the market. And now, majority of these real estate development companies, what they're saying is that they're being affected, like by 50%. 50% of people just said, you know what? They gave them one of these and they said, we're not going to go out and pay. Now, these firms are kind of in a really situation. These asset management companies is what they call them, right? Now, these firms as a whole, they hold sizable amounts of assets that are backed by these real estate related collateral, right? So that means that you have a real estate and you're going to go ahead and use that into collateral, which then makes them really highly exposed to like a prolonged property market distress. Now, what does that mean essentially? So that their companies, for the most part, are going to take hits going on forward. And then if mortgage rates increases, and then the total interest on buying and selling money is going to go ahead and increase, property values will decrease. That means that their prolonged exposure is going to be pretty crazy. Kind of resembles something that happened back in 2008. Now, their analysis identified 3 of the business most vulnerable to persistent troubles in China's real estate. Now, the asset management companies, these firms that are holding these sizable collateralized properties, they're going to be one of the biggest ones, man. And all of these, especially at 50%, they're like, dude, we can't pay if we're on lockdown all the time. We cannot afford this. And mind you that China is super expensive. When you get into these big cities, when you get, Shanghai, Beijing, Hong Kong, all these big cities, they're extremely expensive. Poverty is a huge thing. Like when you walk around, you see it like face to face. You're like, oh my God, this place is probably booming. Like in Japan's one of those other places. When I went to Japan, I thought Japan was gonna be like full of like the cleanest, which it is. It's fairly clean, and majority of people are very passive. They don't really like to talk to you. You have to go to a bar and get drunk with them in order for them to go ahead and like you. And then majority of the bars are like, they're like little closets. They're the smallest little hunky-dory, shitty fucking bars I've ever seen in my entire life. But they're super fun. They do eat something really weird there that I didn't notice until I actually went there, which is medium rare chicken. Not the business at all. I did not like it. Did not like it at all. But the rest of the food is cool, and I thought Japan was going to be really good. But China's taking a big hit, and I understand. You feel for these people. You feel for everybody, especially in every single country that has something that goes along with something where your government does this bullshit policy. Like we have this stupid CDC who thinks that they know what they're doing. And when the hell did the CDC actually become so star-spangled banner and being such a huge influence in what we do here in the economy and how we are restricted in what we do? Idiots. Well, anyways, if you like the content, please consider liking, subscribing, and commenting for up to 50% commission rebate, 0% listing on your next real estate purchase, 0% listing on selling your current home or any mortgaging assistance. Link in the description below. Really appreciate you watching. Till next video, guys. Peace.
I don't wanna waste a minute.